seeing in the markets. Then I'm going to look at market internals. I'm going to look at the main indices, go through, look at the dollar. I think the dollar is really crucial at this point in what I'm doing and what you should be looking at. Then I'm going to talk about stocks and commodities in relation to not just owning the stock but ETFs as well. So I'm going to look. Somebody asked me a couple of weeks back about ETFs. I didn't really come back in sufficient detail about that, so I'm going to do that today. Yeah, hi, good to see you. Yeah, I've done some more research on ETFs. I'll talk about the sort of good and bad side of ETFs, pluses and minuses of those. But right, let's get going. So let's zip through where the market is at the moment. So this is the Nasdaq. What the Nasdaq does, the rest of the market follows. So because this is a weekly chart, and at the moment the Nasdaq has popped up out of this funnel pattern. So it's a great finish to the week. So obviously if we can pull back and hold, then we can push potentially towards 14 and 15,000 potentially. The couple of issues I've got to do with the technical side of what this Nasdaq's doing is this. I'm using two pens. Let me just concentrate. Yeah, a couple of issues are this. We are divergent up here. There is a divergence. I'll explain what I'm seeing in this divergence. This is the MACD, moving averages, convergence, divergence. It's a really, really useful tool. These are averages which are crossing up, but we're making new highs up here and lower highs in the histogram. So this is potentially a loss of momentum, but we're above the midline. So all the time we're above the midline, we are bullish. But like I said, we're making there's a new high, and we're making a lower high in the averages and a lower high in the MACD histograms. We're also seeing a decline in volume. So coming up on a decline of volume, plus, so that here's the bull side, and here's the bears. Can you see this text okay? Good, okay. Everyone else's sound is working. So Wally, do you want to try and log out and in again? Right, okay. So case for the bulls on the left, case for the bears on the right. Right, bearish. We've got divergence. I'm going to call it a divvy for short, because that's what my trading buddy and I used to call it. A divvy, which is here. Lower volume. Decline in volume. It's not low volume, it's lower volume. Averages are all in tune with a higher move, and we've broken out this funnel. So it's even Stevens. Yeah, it's two on either side for the bulls and the bears. Right, so let's dig deeper. Let's come down to a daily chart. And you see Friday was very hesitant. Now data, there's the funnel pattern again in the daily chart. So I think the key to any week is how the market handles Monday. If we gap down on the Sunday open, on the Asian Open, and sell into that gap, then this market's done. This market's had it. If all we do is pull back into that trend line, so we've broken it, if we now come and retest it, which will be about 13, yeah, just underneath, about 13.2, 13.1, maybe even a full 13,000 test. If we come down and test that and hold that, and subsequently push higher, then this could be quite an explosive move. So what I'm looking at here is, let's get the pen. Let's get the tools on this chart. So we've got a 1, 2, 3 wave move. Now wave 3 was the strongest move, so that is in line with Elliott wave. If wave 3 has to be the strongest move to qualify for an Elliott wave. So Elliott wave now says you get 5 wave moves. So we've potentially had 3. Wave 4 would take us back, potentially take us back into that 13.2. Wave 5 could zing us back to 14,000. If we close underneath 13.2, this market's had it, and we're toast. So no reason, as I've said before, no reason to sell this market. It's very bullish. But there are some issues to there. So this week we've got US GDP, core durable goods, and Fed. Now Fed is on Wednesday, so this market could move sideways until we get the Fed out of the way. But hey, let's just take it one day at a time. But at the moment, no reason to sell it. Very bullish, just some nervousness into the back end of last week. And like I said, it's all going to be dependent on the Sunday open and the market reaction on Monday. So any severe shocks on Monday, and we could have a problem. Right, let me just get going. Let's now move on to, let's look at some European indices. Let's flick across to let's finish with the US first. Here is the mid-cap index, the Russell index, holding up, very bullish, and that's got higher volume. Now the small caps have been doing really well. The big stocks, even the FANGs, have been suffering from being too expensive, whereas the mid caps have been catching up. The US, the Fed is 2 hours before the close on Wednesday, so it's 2 hours inside the cash session. Yeah, let's take a look at we'll look at the dollar in a second. So Nasdaq bullish, Russell small cap index holding up, Dow lagging. Of all the main US indices, this is the one that's lagging. This actually has broken a key trendline support and is really struggling. So the Dow is out of sync with what we're seeing in the other indices. Right, DAX, German index, very sideways, couple of lower closes, but clinging to this level 13.8. That level is significant because it's close to the February 2020 drop. So what we're doing at the moment, this is still bullish by the way at the moment, but it's hesitant. We've had a 1, 2, 3, 4, 5 push up and a 1, 2, 3 wave pullback. So if this holds and we can consistently close above this level here, expect to come up to 14, 14.5. Close underneath this 850 and this is toast. It's had it. So again, no reason to sell. We just need confirmation that this can open and close above 850, 14,000 on the DAX. So bullish, no reason to sell. Let's have a look at the FTSE and then we'll get going on the internals. Right, FTSE is really struggling. But although we are closing lower here, let me take this ABC off because I think it's misleading. Any market that can sustain itself above the 50-day average is in a bull zone, is bullish. So if all we do is the 50-day average is down there at 65.80, so we had this we had this huge push up on the 6th, and all we're doing is staying in that zone of the 6th. So although this is the weaker of all the indices, we are just drifting lower. It's potentially still a bullish consolidation, because if all we do is come back in contact with the breakout zone, and the 50-day average can creep up and we connect with the 50-day average, then this bullish consolidation is over and we could potentially make our way back up to those highs. It is a concern, the fact that we are closing lower. So I think short term lower, but if we can reconnect and hold, then we can move higher. But short term, this is lower. And we are seeing a lower level of volume here. So the momentum is coming out in some of these indices, not all. So it's mixed to bullish. Like I said, if you look at this 50-day average, this push up from November has seen all lows bought so far. So we're just potentially just waiting for a further push lower. I tend to find the Americans prefer simple moving averages, so I use simple. This is a simple moving average, SMA. You can see that top left. So it's a simple average, and answer your question. Not a massive difference. I'm not a huge fan of averages anyway. I just use them as an indication, which is, in my mind, exactly what they're intended for. Okay, so let's now cross over to the dollar, because I want to try and keep this as short as I possibly can. Right, dollar daily, we've seen, so after we've broken out of this funnel pattern, pushed into close to 91 and finished close to 90. So what we've got is a very bearish 5-wave down, and then a correction, a 1, 2, 3 wave correction. Now after the correction, we've started to sink again. So if we continue lower, this is important, because any strength in the dollar is going to put at the very least, put a lid on the US markets. And what the US markets do, the rest of the market, Europe tends to follow. So if we see any significant uptick in the dollar, watch out for not just the US indices but Europe. So at the moment we are still bullish with a weak dollar, and so if you look at the volatility index, we are still underneath this resistance. Any spikes higher at the moment have met resistance and have dropped. So as long as we don't close, anything under 30 is still in bullish territory. Anything over 30 could see this market reverse. Okay, so if we start pushing into that area, that could see the market reverse. Right, let's shoot through Forex, pound US dollar. Let's look at this on the, so we've crashed into this, I say, let me start again. We moved into this resistance area, and are hesitating, but if we, on this daily chart, if we could break this high sometime this week, so a pullback, we're still in bullish territory into 135, 136. If at any time this week we close above 138, watch out, because that's pinging higher. Start closing underneath 136, 135, and this is going to drop out. Let's look at this on the weekly. This is this area here on the left, this pink area, is the Brexit zone. So we broke into the Brexit zone in 2018 and popped right out again. We are just closing inside this Brexit zone. So here's the collar down there at 136. So we just held up here on the weekly. So any pullback is still potentially bought, which could see us coming to 140, 150. And a full retracement is up there at 150. So the dollar at the moment has had that three-wave correction and is potentially rolling over again. And this is sitting right on up against that resistance and could potentially pop up. So we are bullish. Let's do the same with the euro. But let's stick to the pound for a moment longer. Let's now look at the pound yen. Yen's really important. You generally don't get any push higher in the markets with a stronger yen. So the weaker the yen, again, the more appetite for risk. It's a good measure of appetite for risk. So you can see the structure we got here. We're clinging to 142, clinging to it. There's no significant pattern there at the moment. We're just trapped in this tight range between 140 and in the upper end of this little mini range. So a healthy pullback will be back to 141. If 141 holds and we can subsequently close above 142, then that's going to 145. That's going to go and find the February 20 highs, potentially. So a bull flag. Wouldn't be at all surprised to see that dip in the early part of the week, but as long as it doesn't close under 141, that's higher. Euro. This is important for stock trading as well because, yeah, like I said, I think the dollar is the kingpin at the moment, and it is affecting indices and markets, especially emerging markets, because a lot of FTSE 100 stocks are trading in dollars. So one of the reasons why the FTSE is lagging is because we've got a stronger pound. So a weaker pound is actually potentially very good for the FTSE. Right, euro holding up. We've had a three-wave correction to the downside, which is a normal pattern, and this low has held. So any pullback into this area here could then subsequently see that go back to 124 plus. So this is still bullish. I'm not at all put off by that three-wave drop. If you look at this, when this had a three-wave drop, pushed higher, then you get another couple of waves lower, consolidates into support, and then starts to break out. So this is still bullish. Short-term lower, could so easily pull back into last week's support at 121 or even slightly lower, but longer term I can see that getting up to 124 plus. Let's look at Bitcoin as well. Bitcoin is to me a massive bubble, just a huge hyped up bubble. So be very, very careful. I mean, if you are able to buy lows and manage your risk, good luck. Yeah, if you're into the cryptos, then do it. But buy pullbacks. So back here in November, we were seeing all these little shallow dips bought, and then we just bust up in mid-December. So I can see us, we've lost contact with the 50-day average down here. So I think this is a 1, 2, 3 wave pullback. I don't think wave 3 is over yet. I think we could see 28,000. If we reconnect with that 50-day average, then we might do another 5 wave move to the upside. So we do, so this is chop and slop here. Get sloppy, get sloppy, get sloppy. But all that support gets held, and then we break. Then we push up, we get sloppy. We push up, we pull back, and so on. So I think this is still looking lower. I would be very surprised if that picks up from here and starts the motor from here. To my way of thinking, it definitely needs to dip. But like I said, if you're into cryptos, just watch that 28,000. I totally like the concept of blockchain. There's a massive future for it. You know, don't get me wrong. I'm not saying you know, I think Bitcoin is rubbish. All I'm saying is it's just got way too hyped. This is unrealistic, and I think it needs a deeper pullback. And that is borne out with this. You can see this volume tailing off, and we're under the midline. Moving averages are open. They cross to the downside. So I'm still looking, so like I said, looking for that support. Just out of interest, who trades cryptos? Just have a quick straw poll. Who trades cryptos? Anybody? You just do a Y or no in the box, in the chat box. Okay. Right. So a mix. Some people are into it, some aren't. Okay, good. Right, let's move on. Let's now look at quick zip through current commodities. Gold. Gold is a tough one to predict finding here at the moment. Last week I got frustrated with gold because I couldn't trade it. We zipped down to 1805 in the Sunday Open and got very, very shallow pullbacks. Let me take some of this stuff off because you can't see what's going on. So you can see we've had a 3-wave pullback. Sorry, let me go further to the left. Let's pull the whole thing out. So you can see where this great huge push up in August. I think inflation is not just creeping in. I think inflation could possibly accelerate once we get past spring. So as I'm sure you know only too well, this is a big inflation hedge. So you can see the pattern after August, the August push into 2075. I was in a, I think you probably heard me talk, those of you who follow me know I've told this story many times, but I was in a webinar, just sitting in a webinar with a gold bug called Evil Knievel, and he was saying, oh, gold's going to hit $2,000 and it's going to fly. I'm not selling, I'm just going to sit tight, I'm going to keep buying pullbacks. Don't worry about 2,000, it's going to go above there, keep going. Well, as soon as we hit this and started coming off, I spent all of summer saying this was lower. And subsequently, yeah, we've come down to 1765, I think it was the low here. Was the low here, and 1805 was the most recent low here. So I'm torn because we've had a 3-wave pullback. and now we're sideways. So I think this needs another full pullback and a proper retest of 1800. At least I hope it is, because I want to get into it longer term. I am buying some miners at these lows. Okay, so I'm still looking for this to drift lower before this can really ping. It's got this habit of pinging and drifting. So I think but it had two lower closes on back in the second half of last week anyway. So I'm holding out for a lower number in the gold. Let's have a look at the weekly. Yeah, we're closed higher overall for the week. Look at this 50-day average on this weekly. It's really picked up the pullbacks and the trend. I just think we need a deeper move. Right, okay, let's look at silver and gold and oil. Silver, very, very similar pattern. That's the clearer pattern actually. From the point of view that's hit a major congestion area at $26 and come off. So that makes me think that this could come lower as well. And the main trend line support here is down there now. So I would love to see that come back under 25 again. I would be a huge buyer down there at 24.75 to then see if we can ping up and start another run. This run came from, well, everything came out of March, didn't it? March and May and July. So I'm being patient, just waiting for these to pull back. Right, oil. A very weak, yeah, I just think this is way too expensive at the moment. And if we can hold this 52, 50 for a pullback is an obvious one. Commodities love big numbers, so I think we'll at least see 50. We're currently just under 52. A decent thrust down to 48, 48.70 would really get me into gold, oil. So I backed off of gold and oil all last week, and still waiting. Yeah, that's a huge trend line support, and that would connect with my 50-day average and my potential predicted C wave down there. However, the fact we're holding up and we weren't able to close under 52 last week could mean that this is not prepared to dip down there. Weekly. Yeah, that definitely suggests that we are due a pullback. Two lower closes under there with struggling volume. So very, very hard. The main breakout was 48.40. Very hard to see that pinging up from here without a decent pullback. Okay, so that's the main precious metals, well, industrial metal and precious and oil. Quick look, coffee and cocoa. I'm not going to get wheat and beans are coming off, which is great. I won't go into detail now, but looking for those to pull right back. This is a typical seasonal event anyway. I'd be very, very surprised. So all these commodities are doing is pretty much reacting to the dollar at the moment. The planting season isn't underway yet. So until we get planting season and crop and plant reports out of the way, and more data on the dollar, I would not look at that. Let's talk about natural gas. Yeah, natural gas is just sort of waving around really. This is a decent support. So 24.55, that's a huge level of support. If we start closing above 25, we could easily go and see 30 again. Gas is not, once all the main contracts are done in early November, this does tend to flap around. It doesn't normally spike unless you get a really cold spell. But it is a huge area. So if you're looking at gas, I know Wally, you like the options as well. Options trading could be good on that. Decent support. It's not closing high yet though. It's a series of lower closes with lower volume. So you are better off just sitting on the sidelines just in case that dollar pops up. And last but not least, cocoa, only because I went on about that a lot last week. So let's just talk about that and then we'll move on. This is London cocoa. There is of course a New York. Yeah, I've been buying dips in this. I still think that's a nice pin bar on Friday. So we're holding this little apex. We dipped it. Actually, there's a gap fill there, wasn't there? We've just filled a gap at 1684. So we may dip a little bit low in the early part of the week, but I think that's going to pop back up to 1920 and could potentially go on a little run. Main resistance is up there at close to 21. If we can close above that, that could be a huge breakout. It could take us a lot higher. It's a big box, so I've just been buying dips. I just sucked in by this big move up here in November, but looking for a higher move. The good ETFs and the Wisdom Tree. What's the name of that Wisdom Tree ETF you're in, Yonja? Yeah, the cocoa one. Oh, it's just called COCO, is it? Wisdom Tree is a good unit trust. Yeah, okay. Wisdom Tree is a good, stable ETF fund. Actually, just one final thing before I come out of this. Just look at this pattern here. Look at that support. So we might come a little lower, but if you're an ETF, it's not a big deal anyway. I don't think. Obviously, the better the price, the lower the price you get in, the better. Assuming it does pick up here, of course. But I like that pattern. And if you look back to gas last summer, when I talked about gas last summer, you will see that this is what gas was doing last July. And when gas did break out of this 15 low, we spiked, we doubled. We more than doubled. Okay, so it's possible London cocoa could go on a run. Right, that's the end of commodities. Unless anybody wants to talk about other commodities, there's copper. Copper's a good benchmark for appetite for risk, and this is just hardly pulling back. Why is copper a good benchmark? Because it's used extensively in housing and other parts of industry, so it's a good benchmark. Right, now stocks. I'm going to run through. I'm going to talk about US stocks as well. I've lined up some US stocks to look at, but before I do that, I'm going to run through the UK stocks. Call my list up. Let's start with the banks. So I've been suggesting over the last week or two, last couple of weeks, that these markets needed a pullback. So we've seen how the FTSE index is struggling, and you can see how Barclays has come back to this main area here. Whoops, hang on. So we could still be in for a lower number here. I think if we close under 140, then expect to see 135 and lower. I just think that it's been sitting up, after this big run here on the 9th. I just think it's been sitting up too high. The pullbacks have been too shallow, so I still think that will come lower. The volume supports a lower number as well. Right, Lloyd's. Yeah, good question. I'll come to that in a second. Lloyd's has come back to a key level of support. I still think it's lower. I still think we could get closer to 30. 33 and a half is a major level of support. It's just, it could tumble. I'm just a bit concerned about, I've got a little nagging worry about the markets that they are, I'm talking about US as well as UK, that they are sitting up a little expensive. It's been such a massive run, huge influx of cash into US and European stocks. At the moment, it's sort of climbing a wall of fear. What do I mean by that? What I mean is we've got no alternative for cash. So cash keeps coming into these markets on dips, but there's a little bit too much red on these markets for me at the moment. That's why I'm just cautious about what we're going to see on Monday. This is coming down on volume, which makes me think if we came down on lower volume, that would be very bullish. Coming down on volume is bearish. So if you're in these stocks, if you're in it for long term, you'll know what I'm going to say, sit there and do nothing. If you are trading shorter time frames and trading the wave patterns in these stocks, wait for deeper pullbacks before you jump in again, which is what I'm doing. Let's look at Standard Charter before we move on, and let's look at HSBC as well. Yeah, it looks. Sorry, what were you saying? Okay. For the big numbers down there at 400, we're at 407. So at this stage, it looks lower. Right. Let's move across to oil stocks. BP holding up, but it's floating. It's floating mid-air. I mean, to me, that needs to be grounded still. There's a gap down there at 272. I would have oil's holding up, but I would have thought that would want to come and fill that 272. So if you're interested in getting into these oil stocks, be patient. Dutch, Shell, exactly the same pattern. We've got a gap down there. We've not quite gap filled. Very hard to see that gap going higher at this stage until we get a lower number. This is a cheapie, which Andy was talking about. Is Andy in today? No. Oh, maybe it's okay. So I think this is I really like this one because it's nice and cheap. There's a possibility this could come all the way down to 28. Possibility. And completely retrace. It's just not doing anything. So I think we might retrace this breakout area on this. So I'll keep you posted. Now switch to miners. This was one of Andy's. This is a fantastic little support pattern here. Notice how if I strip away all the rubbish, all the noise, if I strip away all the noise, you can see how this 50-day average has played quite a major role in this one. A big bust up here, then we drifted back to under the 50 and immediately closed higher. That's very bullish. Closed underneath, immediately closed higher, very bullish. This time round, they knocked into the 50 and then ran it. So there's a good chart pattern on this Griffin. It's very expensive now. We've come up from 35 to 132, and there's the gap at 97. You can see I've put an alert on there for 97. So if gold does drift lower, as I'm suggesting, this one could come and fill that gap as well. Pan-African, lower. Now this is a nice cheapie, so this is worth watching. Because if that drifts back, the big red line there at 2050, we're not that far off it. In fact, I'm going to set an alarm down there. I'm going to be cheeky and, well, not cheeky, I'm going to be practical. I've set an alarm of 2055 because I think that would be a good. So we've seen a high of 2720 coming off at the highs, losing support. And so it could come all the way down to that 2021, which would make me very happy if I can get in on that Pan-African PAF. Right, if you look at the big ones, Anto, they had good runs. I mean, really good runs. Just this is general miners now. Rio. They're just too high. They're just floating. Yeah, I like your comment, Altaf, about nickel, lithium, and cobalt. Yeah, well, actually, for cobalt miner. I think these guys are cobalt. And these guys have come up. These guys had a lot of problem with a mine in Congo, so they struggled for quite a while. Right. So this has come up from a low of 98 to 286. There's a lot of that's not the one. There's a lot of internal buying on that one at the lows. Questioner, yeah, just sorry I missed that. Are Shell and BP at a peak to sell? Not in my opinion, no. These big oil companies are smart enough to know that oil consumption is in decline and there is a glut, particularly with the shale producers who turn on the taps when the price gets low enough. So I think Shell and BP are still good buys on dips rather than, I wouldn't short Shell and BP. If I'm going to short anything, I would short weaker sectors like bricks and mortar retailers and anybody who's exposed to hospitality and travel. I would not, personally, I would not short big oil stocks like that. Just a personal preference. Yeah, good point. But BP and Shell a 50% discount. Yeah, very good point. Thank you for that. Right, let's look at what do I want to look at now. Let's look at the stalwarts. Let's look at BT. I think I don't want to seem overly bearish on this. I'm short-term bearish. I just think, you know, I like to trade the waves. I don't like to sit in stuff for months on end. You know, something is hitting resistance, a clear resistance level, then I'm out. I'm taking profits. I'm not sitting here forever and a day looking at this one. This one is just, it's a very nice bull flag, but it's just got to, like so many other stocks I've been talking about, it's disconnected. So I can see it coming back down to at least 130, and on, if it gets a really bad hair day and a tailwind to the downside, and some fear steps back in the market, which we're not seeing at the moment, then 120 is possible. It's had a huge push from 95, 94.80. So short-term lower, long-term higher. Now this is one, just switching outside of different sectors. This is, again, this is another one of Andy's. Not sure why Andy's not here. I hope, like I said, I hope he is okay. This is dipping back into support. This is a Hammerson. Now, I have been buying on these dips. Obviously, in proportion to my account, I am aware that this is not holding at the moment. So, this could, we broke out from 15, 16 here. So, we might come and see that. But I've just been scaling in and scaling out. I am at the moment scaling back in again on this one, but it's looking lower. We're coming down on volume, so we could get lower on that one. So I'm just managing my risk. However, if we start to turn and pick up, then I will increase my position size, but at the moment that is not doing it. There is, you can see the support down there from the, it had a rights issue at I think it was 30p, is that right? Or am I confusing that with Rolls-Royce? It had a rights issue, so that's why it's one of the reasons why it's so diluted. We've got this trend line coming from the gap down on the 10th, which picks up the low of the 21st of December. So if we start turning around here, I'm going to add, but at the meantime, I'm just managing my risk as this still looks lower. Right. So I should have stayed on the miners. I've come off the miners subject too fast. Let me go back to miners for a moment, because I've forgotten a few others I want to show you. Fortuna Silver. So bear in mind what I said about silver. This is a nice cheapie. It's been as high as, almost got to 10, went to 960, and has got key level of support down here. I tell you what, if that turns around and closes above 7, I think that'll pick up quite quickly. So that's a good one to watch out for. SLV. I'll move on to US stocks in a minute. SLV is having a really good run. Way too high for me. If you're in it, stay put, but manage your risk. Right. Been looking at IQE. That's high, sitting up on volume. Not. I would have thought we'd see 80 in that. It's a lovely breakout, and looks if it could go to 100. If you're in it, stay put, but that might pull back to 80 given what I've said about the markets all along. Polymetal, thank you. Very, very high, an expensive stock, but that looks higher. Unlike a lot of other stocks, that's picking up in volume down here. So if you're interested in this one, like I said, it's an expensive stock, but these dips look lower, and we look as if it could see 1850 plus on that one. Potential bull flag. Trading statement of Friday, right? Okay. Let's look at. Now you came out of this, Yonja, didn't you? Seeing machines. Still not pulling back. So I'm just flicking across. Tell me what you. Yeah, well, never mind. The most important thing is you made a profit. That's come a long, long way. If you made a profit, just pat yourself on the back and be patient for a pullback. Blink is, and now Blink is a great stock. Incredibly high. I mean, in London, they're talking about extending the congestion charge to the outer circular roads and ultimately the M25. If they do that, there's going to be a huge glut of fossil fuel cars on the market and a huge demand for battery cars. So that is shown through in what we're seeing in these markets. Right. Just gonna go rattle through my list now because I'm really running short of time. Babcock. Was it Andy? Was it, who brought this up? Somebody brought this up last week. It's gap down. I'm guessing this is earnings. It was doing really well. It was as high as 365. Buy signal here on the 20th. New low, close above next day. Decent volume. I think this is a. I think this one is. And the pullbacks into this 20th of January price are getting bought. The key price is this October 30th low, which we are holding. So I think Babcock is potentially, it could dip back into this low again. It's a gap down after all, and we've not closed above the gap down area. If you're interested, I would be very patient and buy and see if you can get a further dip on that. But that's dipped right back into support. I mean, back here in pre-COVID, we were 645. I think that is probably one of the best charts I've looked at. Anybody in this? Anybody looked at this Babcock? Cinema World holding up. Amigo sideways. Blockchain. That's been as high as, this is Argo blockchain, 145. So anybody's in trading stocks interested in blockchain, take a look at this one, because that's holding a key support here. It's got some gaps down there. So it's holding this zone support. I think that's potentially returning. If you are interested, I would try and bid on about 69.70 with a stop under 58. I'd get out if it dipped under 58. They do crypto mining, right? Just if you're interested, right? Right, any other stocks you want me to look at? Let me just go through my list. What have I missed? Givo, yeah. UK techs. Anybody else want to answer that? I'm just about to look them up. Index ETFs, okay. ASOS, yeah, good point. Yeah, I was reading about that. Should have picked that up, shouldn't I? Yeah. Well, they don't want the shop, surprise, surprise. So I don't know what reaction that would be. Looks good here. It's been as high as 55.30. Yeah, I think I would, if you're interested in buying it, I would try and pick up 47.20. Right, I'm just going to answer that question about text. Bear with me. You know what? I spend so much more time looking at yeah, I think you're absolutely right. The US market's been on a tear, absolute tear. I mean, if you look at penny stocks, yes, I have got a list of penny stocks here. Yeah, I can't think of a good tech stock at the moment on the UK market. There must be loads. I spend more time looking at US tech stocks. I'm just going to come back to you in a second. I'm just doing a quick, very, very quick scan. Pass. I have to come back on that. Penny stocks, yeah. I mean, US stocks that let's go across the US now. KGC. This is a minor. I mean, I like the volume and the pattern, so I've been buying down at 7, and yeah, just looking to see if we can pick up into 8 plus on Kinross Gold. I like there's my penny list. I'll tell you what, yeah, I'll show you my penny list here. Hang on, I've got it on my other screen. I'll drag it across. Oh no, I'll tell you what, I've just punched them in. Oh, that's not penny, is it? Yeah, here's one. Yeah, I think a lot of markets are too hot. I mean, it's not untypical in this time of year to see quite a pullback, not a sell-off, but a pullback. And I think it's the Dow that concerns me, because the weakness in the Dow suggests to me that all is not right. Okay, the Dow is full of some heavy industrials, but so I can't find this one. Hang on. I don't know the ticker. I've got to find the name. Here it is, ADTX. Here's a penny stock which has broken out. It's biotechs. You've got to be careful with these biotechs. I think if that comes back to 206, you might find that winding its way up to 6.6. Huge volume. It is a bit of a what they call a pump and dump stock. Now, these pump and dump stocks, the actions in the name, they pump it up and dump it. But if you're very patient with these and wait for a pullback, you may find that gets repeated. Right, the other one. Let's go to the other ones. So let me just call up my other lists. This is better. This is better. Right, okay. These are not necessarily penny stocks, but they are very good movers. That's a relative. It's not a penny stock, but obviously, but it's a really strong stock. Fubo. I'm in this from 32, currently 37. I still think this could pull back again. Most recently been up to 62. Another one I am looking at, SK. LZ. Can't find it. again, that's a cheapie. This is a really good one actually. Nice volume. I'm really hoping that this one pulls back to 15, 16. So I do like these cheapie stocks. Good high growth potential stocks. That's what I've been scanning for. Right, listen, I've actually got to go here now, so I've got a number of people tailing off anyway. Anybody want to look at any particular stocks before I go? This one's flown. I didn't talk about ETFs. Let's just quickly go off ETFs. Right, the ETFs I like are I'm not a huge fan of ETFs, but let me just give you some guidance on my thoughts on ETFs. Problem with ETFs for me is they're very widespread, can be quite slow moving. And let me just do a screen out of them. I prefer my preferred companies are oh, what's that other one I mentioned earlier? You do Vusa and Vuk. Right. S&P, okay. So this is actually on the London, isn't it? Why is that not finding it? Okay. Yeah, this is typical of ETFs. They tend to be they tend to just grind higher because they're such general funds. This is why I prefer stocks over ETFs. But the company I mentioned earlier, it's momentarily gone out of my head, is a good one. It is good for diversification. Skills, that's the one I was looking for. Yeah, Skills, thank you. Why could I not find that earlier? Still can't find it. Skill, I know, I spelled it wrong, haven't I? I give up. I can't find it. I don't understand why it's not showing it up. It's a stock. It's a high growth stock. Don't worry. I'll have to come back to you about it. I think it's gone very high at the moment anyway. Other one. Let me just quickly zip through some penny stocks. I'm trying to cover too much ground. Yeah, I like this one. LG. This one's sitting up too high, isn't it? That needs a pullback. These penny stocks are great for day trading. Can be. This is a potentially good one. Yeah. Okay. Let's stop at this one. This is MRIN, Marine Software. Marine as in marine software. MARIN. This is a higher probability one. You need to try and buy a dip. It's been as high as 560. So you get this massive explosion. It's another pump and dump candidate where they pumped it up and left it, dumped it. So on the 21st of October, it zoomed up. On the couple of days later, they pushed it up again, and then left it. But I do think it's due another squirt. The trick is to try and buy. If you want to buy and hold, you don't have to risk that much capital to buy a lot of stocks. That's one way of looking at it. But this looks as if we could get another leg up here on this Marine. So if you buy down here at 2.25 with a stop underneath about 1.9, 1.95, you might find this bursting up again. The best way of doing these, it's a gaming platform, right? Yeah, that's that's one option. Like I said, they're great on. There is a very specific method of trading them by day trading. Be careful if you end up holding them over longer periods. What's the other one I was going to show you? This one is Diebold. Again, this doesn't classify as a penny stock, but I think if that dips back to 10, I think that could get another leg up. It's just struggling up there at the top of that little channel. It's been as low as 6.4 or 6. Great day trading stock. I mean, if you look at it on a smaller time frame, let's look at it on a 30-minute time frame. You can see here on Thursday, it spiked. You can go lower. Let's go to 10-minute. Yeah, so we had 2 days of it's run for a couple of days. It gaps up, runs heavily into the open. After that gap, after the push into 13.5, you see 12.5. So that's quite a significant move if you've got a substantial number of shares. And it does a similar thing on the Friday, but on a much smaller scale. Right, okay, I'm going to leave it there. I need to run. We've had a number of people dropping off anyway. And I hope you found that useful. I will gather my thoughts and find that skills as well and the other stocks and run that list up properly and go through it with you next week. UK techs I'll come back to you about, yeah. Like I said, techs I do definitely tend to follow the US market for techs, but that's a really good question, so I'll make a note of that. Enjoy your week. There is the midweek session as well, 6 o'clock on Wednesday. Link is on my website. If you come down to this homepage here and click on the free event section and then go to the big picture event updates, it's there. Right, okay, so that's there's the midweek. I'll give you the midweek link now. Right, good question. You've got a couple of options. There is a Wealth Club. I'll give you the link for the Telegram app. Let me give that. I'll just go and find that, and I'll also give you a link. Right, here is the Telegram app. And here is if you look on the website at the bottom, Does that give you take into my groups? Yeah. Go onto the bottom of my website. You'll go to my Facebook page. Facebook page is here. I normally stream this on Facebook. I've not done that today because I've done a separate recording. And Twitter. The one to be in is the Telegram app. Because that is going to be very active. That's the one I'm going to be spending more and more time on. So I would thoroughly recommend you join the Telegram app. Okay. Yeah. Okay. Have a good week, and I will midweek. I'll follow up the stuff I haven't done today, and I'll get the US list in order. All right. Thanks very much, guys. Have a great week, and see you back on Wednesday.